Hi everyone, my name is Nisreen Kamal. I am the Arabic editor of the China Global South project. And let me tell you a little bit about the work we're doing before you get to today's podcast. So basically, if you check the news to look for stories about China's ties with the United States or Europe, you will definitely find a lot. But when it comes to stories about China's relations with developing countries, which we call the Global South, it's a different situation. So this is where we come in because we provide you with in-depth analysis and daily reporting about China's activities in Africa, the Middle East, Asia, and even the Americas. And our services are available in 3 languages, which are English, Arabic, and French. You can try it for free for 30 days at chinaglobalsouth.com/subscribe. Once again, that's chinaglobalsouth.com/subscribe. Thank you.
The China in Africa podcast is brought to you in partnership with the Africa-China Reporting Project at Wits University in Johannesburg. The ACRP promotes balanced, considered reporting on China-Africa relations through training programs held throughout the year. More information at africachinareporting.com.
Hello and welcome to another edition of the China in Africa podcast. I'm Eric Olander. Kobus is at an event for China-Africa scholars in Germany, and so he won't be able to join us today, but he'll be back again with us next week. Today, though, we're going to bring you up to date on the debt situation in Ghana. Let's just say that it has been a god-awful, terrible, miserable, bad year for Ghana so far, at least economically speaking. Now, earlier this year, they became the second country in Africa in the pandemic era to default on a part of their debt. Zambia, of course, you'll recall, was the first to default on their debt. Now, in Ghana, the problem is that $55 billion of total public debt just became too much to handle. Let's break that down, what that $55 billion is made of. 42% of that debt is owed to domestic creditors, with the remainder owed to external lenders, which comes to be about $28 billion or so. That $28 billion breaks down into a few big groups. Now, Eurobond holders make up the largest with about $13 billion. Those are the bondholders, what we call the commercial creditors or the private creditors. Then there are the multilateral creditors. That's the African Development Bank, that is the World Bank, the IMF. They're the second largest with about $8.1 billion. And then there are the Paris Club creditors. Those are the rich countries, $1.9 billion. And close to the bottom are the Chinese with just about $1.7 billion. Now, these numbers are coming from Reuters. There's probably some different accountings that I've seen, but it gives you an idea of where we are. But when you look at the amount that the Chinese owe against the whole, it accounts for just 3% of the country's total public debt. Now, that's important because we've been hearing regularly from the foreign ministry in Beijing that the accusations that the Chinese have a bigger role in Ghana's debt crisis are misplaced, in part because they own such a small share of the total. But the Chinese are nonetheless very important in the process, which is why Ghanaian Finance Minister Ken Ofori-Atta traveled to Beijing last week to meet with Chinese Finance Minister Liu Kun. He also met with the Commerce Minister and officials at the China Exim Bank. Now, if you follow Ofori-Atta's Twitter feed, he's telling everybody with big smiles that the situation is under control, everything's looking good. What they basically want to do is they need to get their creditors in line in order to qualify for a $3 billion emergency package from the International Monetary Fund. Now, that sounds reasonable, but this is the process that we've been watching stall in Zambia. It's a process that took almost a year to complete in Sri Lanka, and the Ghanaians, they seem confident that they're going to be able to complete this process by the end of March. Now, the end of March is already here. They haven't gotten a deal yet, but they think they're going to get it imminently. We want to see if that's really the case, so I am absolutely thrilled to have on the show for the first time Isaac Kofi Agyei, who is the lead data and research analyst at the popular Ghanaian radio, online, and TV network Joy News. He has been commenting on this for weeks, doing some excellent reporting this on TV and online. Isaac, good afternoon to you in Accra, and thank you so much for joining me on the show today.
Good afternoon, Eric. It's a delight joining you today.
It's fantastic to have you, and I hope you're going to be able to set us straight. Last week, you published an article on Joy FM that asked the question, Ghana's external debt restructuring. Does China matter? Let's start our conversation there. Does China matter in this whole process?
Well, that's a very big question that to date, I think the government itself, they've not really been able to answer that question, whether China really matters in this whole debt exchange program or debt restructuring talks that we just embarked on. But we have to understand that the kind of restructuring we are doing comes in two folds, where we have the domestic aspect and then the external or foreign aspect. With the domestic aspect, we've been able to actually go through where the success rate was about 85%. A lot of the domestic creditors or people that we are owing in our local currency, which is the CD, actually coming on board for a restructuring. But one thing that's so important is that at the moment, the reason why we so much need a $3 billion package from the IMF is not just about the money. It's about also restoring the credibility that we have in the Eurobond market or in the international financial market. If you look at Ghana's external debt, for instance, is the biggest challenge currently, because if you look at a country like Ghana, where at the beginning of last year, we had international reserves worth $10 billion, and within a span of just 11 months, it dwindled down to just $5 billion. You could see there's a lot of pressure on the currencies, the countries' external reserves or international reserves, if you want to put it that way. So in this instance, where Ghana needs liquidity, foreign liquidity, mind you, we don't print dollars here in Ghana. And if we are settling any external debt or debt servicing, we are supposed to pay them in dollars. And we just have about 5 billion in our international reserve. It's about 2.8, just less than 3 months of import cover. So it's a very big question that we're still racking our head around, whether China really matter, because $1.7 billion in Ghana today is a big deal, because the entire country's reserve is about 5 billion. So it means if you have a debt stock with someone or a creditor and it's about $2 billion, it makes it a big deal. So the major challenge right now is the debt servicing in dollars, or in, how do you call it, if you want to put it in foreign currency, which is the dollar we're using at the moment. So that's why it is so crucial that we have all external creditors on board to make sure that although we are able to go through the domestic debt restructuring, the external one is very crucial, because any servicing isn't going to be in our local currency, which is a CD, but it's going to be in dollars.
So let me understand something about the situation in Ghana, because what you've described in Ghana regarding the repayment of debt in dollars and the devaluing local currency and that mismatch is not unique to Ghana. That's a problem we're seeing in Kenya. We're seeing it in Ethiopia, in any number of African countries, if not most African countries. What happened in Ghana that made it unsustainable, that it simply couldn't handle the debt and it just became a point that they had to default on it? What, and then going from 10 billion to 5 billion in reserves. Give us a little bit of the background of what led us to this point.
Right. So if you look at Ghana's current debt stock, which is around $55 billion, and you do look at the disaggregation, you will see that within a span of just 2 years, we've added about 300 million Ghana cedis to the debt stock, which is about $30 billion. So in terms of just last year alone, because of the depreciation that the local currency faced, we weren't borrowing, but we ended up adding 90 billion Ghana cedis to the debt stock, which was around $9 billion then. So that should tell you that the kind of challenge we face as a result of the exchange rate issues really affected our debt stock, where at a point we weren't really borrowing, but just because the CD was depreciating, it was just increasing our debt stock, especially at the international front, where we had to settle debts in terms of other currencies other than the local currency, which is the CD. So exchange rate was one of the major reasons why Ghana's debt stock rose to the level that made it so unsustainable, that the finance ministry itself did a debt sustainability analysis and came out to say that at this point our debt levels are unsustainable and it will be very difficult to settle or to service debt, especially at the international front, going forward in 2023 and probably 2024.
Yeah, and just to put that in context for the CD, last year, the CD was not only did it have a bad year, it was literally the worst performing currency in the world among 148 different currencies, and it depreciated by 45%. So that just added an enormous amount of pressure onto the debt servicing. The question for me, though, is was the problem most acute with servicing the commercial debt, the bilateral debt to people like the Chinese, or the multilateral? Where was the problem most acute?
But the problem has to do with the commercial debt. Ghana's debt stock, if you look at the breakdown, for instance, we owe the Eurobond markets about 13 billion US dollars. And in the next 5 years, we have about 7 billion of these bonds maturing, and we have to pay. That is principal. On the side of interest payments and charges, we need close to $2 billion every year to make sure we service our debt. Aside from the Eurobond market, there's this aspect where energy sector debts also adds up a lot to the debt stock. So averagely, we pay close to $1 billion every year as a result of excess capacity from some of these agreements we have with independent power producers. That's one aspect as well. And so you have, the Eurobond market taking so much, and then also the energy sector debt where we pay close to, 1 billion every year as a result of excess capacity. If you heard, just 2 or 3 days ago, we had independent power producers saying that they will not agree that governments restructure about $1.4 billion of debt that government was owing them. They don't want it restructured, and they want their monies to be paid. And so basically that is it, where we also incurred an amount of 25 billion Ghana cedis. Around that time, was close to, $4 billion that we used to perform what we called a financial sector cleanup. So the financial sector cleanup added a lot to the debt stock, where we had to, increase the debt to GDP ratio from below 70 to 80% at the dying embers of 2023. So much going to Eurobond markets where we owe them 13 billion. We pay so much for excess capacity, resulting in energy sector debt, and then also the over $4 billion that we incurred or added to our debt stock as a result of the financial sector cleanup that we did in 2017.
Now, it's interesting because I noticed that you did not mention any of the Chinese debt in those reasons, and in part because, as you pointed out, the Chinese debt really isn't that much relative to the whole. But what's interesting is that when you look at the discussion in a lot of Ghanaian media over the past year, on radio, online, and on TV, there's been a lot of discussion about Chinese predatory lending and Chinese debt traps and the Chinese loans. They seem to loom large in the imagination of a lot of Ghanaian analysts, given the fact that it's really not that big of a role. Why do you think that is?
Well, so if you look at the Eurobond markets, for instance, or the commercial creditors, they have, this large portfolios that, they can actually handle any default at the moment. So it is probably easier to restructure or to carry a debt operation exercise with some of these commercial lenders who are in the international fund market. And then also we have the Paris Club, who are also willing to come on board. But because of the precedent set when, Zambia wanted to restructure their debt, the Democratic Republic of Congo as well. And if you analyze the situation, you realize that it was only when the debts you owe China or the loans you have with China are interest-free loans that they are willing to forgive. So mind you, we are going to get 3 billion bailout package from the IMF. The IMF wants you to restructure your debt because they want the fiscal space for them to perform the program that they want to perform, and then also make sure your economy gets the best out of the program. So they wouldn't want to disburse monies to you to revamp your economy and then you use to settle debt. Because they're giving you 3 billion, you owe somebody close to 1.7 billion, and they do not want you to use the 3 billion as a means to service your debt. That is why at this point in time, every $1 billion is important at the moment. 1.7 billion previously wouldn't have been a big deal, but now looking at the situation Ghana finds itself in, If we owe somebody 1.7 billion, it's a big deal. But the reason why we have a lot of talks around this whole China loans is because of the precedent that has been set and the kind of templates created when Zambia wanted to restructure their debt. Remind you, Zambia got a staff level agreement in 2021, but had to wait up until I think August 2022 before they got the board level approval and China began to come to the negotiation table. So
But the deal still isn't done with the Zambians. That deal is stalled.
exactly. And if you look at China, for instance, they're only willing to play ball when the loans in question are interest-free loans. If they'll come to the table to restructure, then they will request that you extend the maturity periods or increase the interest rate on those loans. So the courts actually looking at some of these loans that we have with China, and they hardly disclose the terms and conditions of some of the loans. So, for instance, we took an amount of $2 billion from the Chinese Sinohydro deal. The agreement was that we give them access to our bauxite mineral to mine, and also we get $2 billion for road infrastructure. I am just looking at my data right now, and in the span of 2 decades, we've taken close to 41 million, project loans from China, and we've been able to rack up about $5 billion from the Chinese, market, or from the Chinese banks, or as a credit that they've given us about $5 billion over the span of 2 decades. And another thing is that, it's so difficult to find China forgiving you your debt. And so if you look around the country over the span of 2 decades, for instance, Ghana, we've been able to enjoy only 201 million worth of debt forgiveness from China, where when we went to the same situation in 2023, where we were HIPIC, we had some of these commercial creditors or the Eurobond market or the West actually coming in to forgive us our debt. Around that time, it was $3 billion that we got as debt cancellation and debt forgiveness.
Yeah, I get the sense that a lot of African governments, and what you're talking about with the Ghanaians also seems to be the case, don't seem to really understand that the Chinese don't play by those rules. And I think that there was an expectation that because the West in the past under HIPIC, which is the highly indebted poor countries, and that was a debt forgiveness, a cancellation program from a couple decades ago. When was that? That was, 15 years ago?
Exactly, over 15 years ago.
And there was this expectation that said, well, if we get into trouble, they're just going to write off the debt. They're going to cancel it. And the Chinese came up and said, no, that's not what we do. You're going to pay the money. You borrowed the money from us. You're going to pay it back. And it may take you longer to pay it back, but we don't forgive the debt like the white people do. But I don't get the sense that there's a fully deep understanding of that in a lot of finance ministries in places like Accra. I still think that they think they're dealing with the Europeans and the Americans when they deal with the Chinese. And they don't fully understand sometimes that the Chinese are playing by a very different set of rules.
So there are so many templates across the globe, or even here in Africa, that we can actually learn from. So we remember when Congo wanted to restructure a debt burden of, I think it was around $1.6 billion.
That was Congo Brazzaville, right?
Exactly, Congo Brazzaville. When they wanted to restructure their debt, they went to China because China was one of their biggest creditors. They were restructuring the debt burden of 1.3 billion. China told them, we can't give you a total write down. All we can do is to extend the maturity period and then also increase the interest rate on the loan. So at the end of the deal, instead of Congo Brazzaville having a debt burden of 1.3 billion, the restructuring actually took their debt to 1.6 billion, causing about a 23% rise in their public debt stock, or the debt that they had with China. So China is only willing to play ball if usually the loans involved or in question are interest-free loans. But if they attract some level of interest, it will be very, very difficult to enjoy a debt forgiveness from them they are completely different from the West.
They are completely different. And it's interesting because we talked to a Beijing-based lawyer who works on a lot of these loans. And he said 15 years ago when he first started going to China, and we interviewed him on the show a couple times, he said that Africans told him over and over again, we don't want any more charity. We don't want any more aid. We don't want any more of that stuff that we've done with the West. We want to do business. And he said, you know what? That's great because we don't do aid. We don't do charity. We do business. Here's the contract. Sign here, here, here. Initial here, here, here. And there you go. And what we found in places like Congo-Kinshasa, in the Democratic Republic of Congo, or in Kenya with the standard gauge railway contract, is that, and we also heard in Uganda as well, that the finance minister said they didn't understand the contract for the Entebbe airport deal, that they didn't fully understand who they were dealing with. And they signed these contracts without full comprehension and legal review of them, and now they're stuck. And I just thought that was really interesting. And this is what business is like. This is not charity for the Chinese. Okay?
It's not. The Chinese are in to do business. And if you look at the number of infrastructure projects they are doing across the continent, it tells you that they are in for business. So, for instance, 2019, Ghana took about 6 different loans from the Chinese, and all were for infrastructure purposes. And these are loans that, they come with so many collaterals where we have to use some of our resources as collateral or security. So, for instance, when we took the loan to construct 11 coastal fishing landing sites in Ghana, we had to use our oil export as the resource security. When we also had to take a loan from China to do the Accra Intelligent Traffic Management System and road completion, we have to still use our oil as security. Again, in the same 2019, when we took a loan to do an integrated national security communication enhancement network, we had to use our bauxite as security. And cocoa is even part where in 2017 or somewhere like that, the Buipa projects, we had to use cocoa export as security. So the Chinese are different. They are here to do business. When they're giving you the money, they make sure that there is something in place that in case you default, they can actually use as a security. And usually they tend to go in for either your minerals or some of your cash crops.
But that's not unreasonable, though, is it?
Well, they are here to do business.
If you're going to borrow the money, you got to have some way to pay it back. And if you can't pay it back, I'm going to take your oil and sell that to pay it back. When I borrowed money from the bank to buy my house, the bank said, if you don't pay it back, I'm going to take your house and I'm going to sell your house and that'll settle the loan. So it doesn't seem unreasonable that the Chinese are using that kind of collateral.
But just like you said, we forget that the Chinese are different from the West. So we probably are taking the same attitude we had with the West to this negotiation table. And for the Chinese, they wouldn't attach any sort of list of rules that you have to follow and make sure you do this, make sure you do that, which sometimes we feel they are sort of austerity measures or they are too much to follow. The Chinese will just come in straight. What do you want? You said you want 3 billion, you want 4 billion. We are willing to give to you. In return, we also want this from you. And if you fail to pay the loans, then this is what we want. We can't give you 100% restructuring. All we can do is to probably when you're in distress, extend the maturity period or try and add up to the interest that we are already charging you. And at the end, you realize that the debt that you have will be completely or significantly higher than what you used to have. So whenever you enter a restructuring decision or agreement with the Chinese, you realize that they are not ready to lose. They are not ready to truncate your debt. They are not ready to bear your sins or carry your sins. They want you to carry it yourself. Okay, so you can pay in 2 years. Can you pay in 5 years? Can you pay in 7 years? And if you're paying in 7 years, come on, there's inflation. So if I was charging you 7% or 9%, now I'm going to charge you 15% and I'll give you more time to pay. That is what the Chinese do.
Yeah, and going back to the first thing you said about the SETI, these loans are in US dollars. And so you're having to burn your Forex reserves to repay these loans. This is the problem in Kenya right now, is that the Kenyans asked for another deferral. The French and the Japanese, the two other largest bilateral creditors, said, yep, no problem. Their amounts are pretty small. The China Exim Bank gave a 6-month deferral on the standard gauge railway loan, and then the Kenyans came back and said, we need a little bit more time. And China Exim said, sorry, nope, you got to pay. And this is hardcore. I mean, this is really hardcore. So I think the lessons here for a country like Ghana, the next time they go into these deals, and this is what I'm hearing from you. Number one, you better know what you're signing when you sign on the dotted line with the Chinese. You better understand what you're signing. And number two is that it might be better if you don't agree to these non-disclosure clauses so that you can have your civil society, people like you, can sit and look at the loan contracts and say, Mr. President, this is a bad deal. And in a democracy, civil society and journalists and people like you have a role to play, but you can't do that because you can't see any of these contracts. Is that correct? They're all wrapped up under non-disclosure agreements, correct?
Very difficult to get the details of most of these Chinese loans that we've taken. All we know is that Ghana signed a Sinohydro deal with the Chinese. They're going to give us 2 billion. We're going to give them our bauxite. But the conditionalities or some of the clauses in the details of the deal itself, we don't really get. And we've already suffered examples when we faced the protracted power outage where we signed some of these power purchasing agreements with independent power producers. We all know how renegotiation of some of the deals saved the country about $13 billion. It was because some of these loans were in the public domain and the civil society were able to criticize some of these agreements, and they called for renegotiations and saved the country about $13 billion. Had it not been that, I'm sure we would have been swallowed by some of these debts that were waiting to actually come and devour us as a country. We are not able to raise much in terms of revenue, and every year, we end up expanding our budget deficits. So, for instance, this year we are projecting to spend close to 2 billion Ghana cedis, which is about $20 billion, and also raise just 140, which is around $14 billion. So the difference is about 60 billion Ghana cedis, $6 billion US dollars. Where are we going to get the money to finance such a high level deficit? These are some of the reasons why government is actually sometimes are pressured to enter into some of these loan agreements with the Chinese and other people who come in, and we are not able to do proper scrutiny. We just enter into an agreement with them because we feel getting monies from such people, the Chinese, and such agreements is so easy. All you need is these are the papers. You want to do business, so sign. I'm willing to give you the money. Unlike the IMF loan, unlike some of the Eurobond loans that we get, that the details are everywhere dense for people to actually look at them and criticize. Who is going to be your financial advisor, the legal lead on some of these loans. And when we go in for some of the loans, the documents are there for people to peruse, but with the Chinese, it's different, and it's difficult getting the details in some of these loans we signed with China.
Yeah, but let's not forget that it takes two to tango. It takes two to dance here. So there's as much burden on the Chinese for the non-disclosure agreements as there is on the Ghanaians who signed those deals. They didn't need to sign those deals. No one put a gun to the head of the Ghanaian president or finance minister to sign a deal with a non-disclosure agreement. So that's the burden lies equally on both sides here in that respect. And I just want to get your take on this Sinohydro deal. You've mentioned it a couple of times. This is actually a point of contention between the Ghanaian government and the IMF. The IMF is saying that this $2 billion deal should count as part of the country's debt. The Ghanaian finance ministry is actually saying, no, it shouldn't, because there's actually no cash exchanging hands here. The Chinese and Sinohydro are building infrastructure, and then in exchange, they're extracting bauxite, but there's no exchange of money on the books anywhere here. So it's not a cash deal. That's one of the reasons why the Chinese overall debt levels seem rather low at $1.7 billion. That does not include, as far as I understand, and maybe you can correct me if I'm wrong here, the $2 billion Sinohydro deal.
Very true. It doesn't. And most of the project loans we've taken from China, just like I said, they would want you to use your resource as a security rather than in this kind of debt. You are not exchanging money directly. But mind you, if you also extract the bauxite and you export, you can also get foreign liquidity. So there's an opportunity cost here. So although you are not paying money directly, how about what are you also losing when the price of bauxite also go up, and then just like the way we are able to export gold and get the revenues directly. And it's so difficult understanding why we've actually collateralized almost all our major resources in terms of using them as collaterals for getting loans. And the bauxite that we actually discovered, we can get a lot of money from it. But because government has been so reckless in their expenditure, they end up inflating their expenditure. And you realize that they did not get anywhere to find money to finance this huge deficit. So they end up looking for money everywhere, anywhere. And once they get the money and they feel, it's so easy getting it, they are willing to give in. And just like you said, nobody will point a gun to your head and say, sign this deal. But once you know that at the end of the year or every 6 months, semi-annual, you are not obliged to pay any US dollars, and you're just supposed to give the Chinese maybe access to your bauxite or to your some of your natural resources. You may not quantify what you are losing in terms of the opportunity cost. What if you yourself you had exported these minerals? How much would you have received? How much would they have helped you increase in your international exchange reserves? We just say that because no money is being exchanged, we feel we are not losing much, but in real terms or indirectly, we are losing so much, and that is why we are not able to increase our international reserve to the level that we need for us to get stability for our local currency.
I guess I'm a little bit perplexed by all of this because we saw what happened when Angola signed over big chunks of its oil reserves to the Chinese, and they literally came up with a name for this. It was called the Angola model. And the Angolans, about 10 years into the deal, said, you know what, this isn't working for us because we were doing an oil for infrastructure deal where they committed, I think, something upwards of 75% of their oil reserves and their oil sales went to the Chinese on a non-cash basis. So what ended up happening was that Angola's economy got starved for cash, for liquidity. So inflation skyrocketed. Now, they got some infrastructure out of it, but that didn't help with the inflation problem. The fact that the Ghanaians did not look at what happened in Angola to see that leveraging so much of your natural resource will starve your economy and rob you from the opportunity of taking advantage of higher commodity prices is kind of perplexing to me because we literally had a case study out there that they could have followed. It just seems weird to me.
Yeah, there's a template for us to follow. But just like I was saying, when you are in a big dilemma or when you're in a difficult situation where you've borrowed so much that you need almost $2 billion every year to settle just interest payments, you are willing and ready to sign any deal that could bring you foreign liquidity or exchange for you to be able to settle some of your debt. Because you know that once you don't do that, one, you're not really getting so much from exports because you've actually given out most of these minerals and you've collateralized them. And although you get the revenues, you end up using them to pay interest on loans. So because of the high level debt servicing we carry out every day, of which most of it are in external currencies or in dollars, where we don't print dollars here in Ghana. If they are in cedis, we can issue bonds or treasury bills, borrow from the local market and then use to pay. But when it comes to servicing of external debt, we always find ourselves in a very tight corner. And because of the high demand for liquidity, where each and every year we spend close to $4 billion importing refined crude, where ourselves we actually have raw crude here. But because we've not been able to put structures in place to refine the crude here, import bill always increasing because of some of these pressures we find as a result of the high level imports we do, where we spend close to $4 billion every year to make sure we bring in refined crude. So the kind of exchange rate situation we find ourselves in is as a result of the fact that we do not have the reserves to give us the fiscal space to carry out some of these things. So just a reserve of a little over $5 billion at the moment, which can only cover less than 3 months of import cover. If the government finds is not able to do an external debt restructuring and would have to pay the $10 billion allocated for interest payments this year, where are we going to get that money?
It's just not going to magically appear, right?
Exactly. So we find ourselves in a very tight situation that always compels governments to sign some of these deals because they feel the Chinese will bring in $2 billion cash in hand. We will be able to use to settle some of these loans that we owe, and the kind of pressure on the liquidity, the foreign liquidity we need every year to make payment, to bring in pharmaceuticals, to import refined crude, and so many other things. The pressure alone is a major reason why we sign some of these deals. And it's difficult, but I feel that we find ourselves in a situation where we are in a vicious cycle where we are not able to get out as a result of government recklessness in actually revenue generation and then also expenditure. We end up giving so many foreign companies tax exemptions, and we are not able to maximize revenue collection. And every year, we end up valuing our deficit.
Very quickly before we go, because you've been very generous with your time, and I know you have a very busy day ahead of you here, I just want to get your take on the standoff that's been playing out in Zambia between China and the multilateral development banks. Now, the Chinese are saying that they don't want to move forward with debt restructuring unless the World Bank and the IMF agree to take losses on their loans, those known as haircuts. And the IMF and the World Bank are saying, you know what? We don't do that. We take losses on the front end in terms of borrowing cheap, and we lend cheap to affordable rates to developing countries. If we take losses on our loans, that's going to affect our credit rating, so we're not going to play that. What's happened is that 2 years into this process, Zambia is still stuck. Sri Lanka got out of it, but mostly because of geopolitics, because China's main rivals, the US, India, and Japan, were all involved in Sri Lanka, and I think that was a very unique situation here. But in Africa, we've seen no progress. Now, what makes Ghana think that it's going to succeed where Zambia has so far failed? Why do you think that the government is so confident that they're going to get the IMF deal and the Chinese are going to play ball when they haven't played along nicely with the IMF and the World Bank in Zambia?
Well, so in our situation, just like we were discussing, most of the loans we owe China, if you look at how much we are supposed to service every year, although the total debt stock is 1.7 billion, the amount we are supposed to pay to the Chinese government in terms of interest payment and then even principal is not as high as in Zambia's situation. Zambia has majority of their external debt owed to China, just like the way in terms of bilateral level, they have majority of their debt owed to China. But in our situation, we feel that the interest rate we have to pay, the loan servicing to the Chinese government is not as high as Zambia's situation. And because we already have some of these Sinohydro deal, so many other things here and there where we've signed so many project loan agreements with China where we have to use mineral resources as securities or collateral, we feel that we can find ways and means to say, come to the table, let's negotiate. We are willing to probably give you a percentage of our crude oil that we actually mine here, and then also probably our gold, because we feel we have mineral resources. We have cocoa, we have gold, we have bauxite, and just recently we've discovered lithium. And so we feel that we have an advantage where we can use our minerals as collateral. So we can say agree that we restructure. So we are not going to pay, we are not going to demand foreign liquidity to settle you, but we feel that you can come in and use a portion of our gold, a portion of our lithium, whatever minerals that we have, you can, use it. And that will be, a way to make sure that you don't lose. But in Zambia's situation, it's difficult. But we feel we have this leverage where we can use our resources or our minerals as securities. They may not disclose this to us, but I feel that the Chinese will not just agree to say, come on, let's go ahead and restructure $1.7 billion. At least something has to give. They will not come to the negotiation table if they are not aware that there is something that they can use as a cushion. So to me, I feel that because we have this mineral resource leverage, we feel that we can use that during the negotiation, and China will be willing to play ball because already we've given them access to our bauxite as a result of the Sinohydro deal. So maybe if we're giving them a certain quota for 2 billion for restructuring, we can increase that quota so that they can agree to play ball for us to restructure the 1.7 billion loan that we owe them. So to me, that's the advantage that I feel that Ghana has over Zambia, where they find themselves in a very tight situation. For the Chinese, something has to give. If you do not have anything to give in return for a restructuring, then be ready to either extend the maturity period or pay high for interest.
But one way or another, you're going to pay, right? You are going to pay one way or another. That's the way it is.
Absolutely. So in essence, we are just going to agree that you extend the maturity period. So as I was saying, we're supposed to pay, let's say $280 million this year. Don't worry, don't pay this year. You can pay in the next 3 years. But once you are paying the next 3 years, give us something in return. Give us access to maybe a bigger quota of your bauxite, or give us access to your crude oil, or give us access to your cocoa or your gold. Mind you, we have this illegal mining situation at our hands where we have these Chinese coming in to illegally mine gold here in Ghana, and they've ended up destroying most of our water bodies, and we are struggling with that situation here currently in Ghana. So, well, at the moment, I feel that will be the only thing that government can use as a collateral. And that's why they are so confident that China is willing to come on board for an debt operation.
Okay. Well, we're going to follow up with you in a few months just to check in to see how everything is going. Everybody, the article is Ghana's External Debt Restructuring. Does China Matter? It's written by one of the smartest guys in the business, as you can hear. Isaac Kofi Agyei is the lead data and research analyst at the popular Ghanaian radio and TV network and online news site, Joy News. So we are just so thrilled that you took some time to explain this to us. If people want to follow what you're reporting, where can they find you? Are you on Twitter?
Yeah, I'm on Twitter with the same name, Isaac Kofi Agyei. On LinkedIn, the same Isaac Kofi Agyei, and then also probably on YouTube, Isaac Kofi Agyei. But yeah, predominantly on Twitter, Isaac Kofi Agyei.
I'll put links to all of that in the show notes, and I want to thank you for joining us, and then I want to let everybody know that Kobus again will be back with us next week for another edition of the China in Africa podcast. So for Isaac in Accra, I'm Eric Olander. Thank you so much for listening.
The discussion continues online. Tag us on Twitter at ChinaGS Project and visit us at ChinaGlobalSouth.com. If you speak French, check out our full coverage at projetafriquechine.com and AfriqueChine on Twitter. That's Afrique with a K. And you'll also find links to our sites and social media channels in Arabic.